Let's talk about it. Let's talk about the elephant in the room. It's the Goldman Sachs prediction of 4 cities that are going to have massive home price declines in 2023 and 2024, and Phoenix made the list. We're going to talk about that today. We're also going to talk about everything else going on in the economy and here in Phoenix. So let's get into it. We're going to start with the inflation information because we're always talking about this. The PCE came out last week, and headline is saying inflation rate slows again to 15-month low. PCE shows as U.S. economy weakens. So it rose a scant 0.1% in December, yet another sign that inflation is cooling off, and the Fed can stop raising interest rates soon. Well, we know that's probably not going to happen, but it is good news that we're starting to see some movement there. It was down 0.1% month over month, 5% year over year, and the expectation was that it would come in at 5.1%. So we were just slightly below the expectation. So that's always a good thing for markets to see and react to. And this is the smallest increase that we've seen in 15 months. We're still above those pre-pandemic levels of less than 2% annual inflation, but at least we're starting to see some movement there. And what's important about this is the PCE is the Fed's most preferred method of measuring inflation because it gauges everything and strips out those volatile other categories like food and energy costs. And it also takes into consideration how consumers change their buying habits based on rising prices. So the PCE data is very important, although we always talk about the CPI as well. So the Fed, next article, set to shrink rate hikes again as inflation slows. So this isn't a really big piece of news. They've been talking about doing this, assuming inflation continues to slow. They meet this week on February 1st, I believe it is, and they are going to more than likely raise the federal funds rate 25 basis points. In this article, they're talking about, I expect it will raise rates a few more times this year, though to my mind, the days of us raising them 75 basis points at a time have surely passed. Hikes of 25 basis points will be appropriate going forward. So that's the word on the street, for lack of a better term. That's what we can anticipate this week. And what'll be important is what Jerome Powell has to say at the press conference after this, because he always gives some good insights on where they think things are going in the future, how they may react to the data that's been coming out, and how they're feeling about the economy. So more info on that coming our way this week. So what's going on with mortgage rates? I always like to talk about this because mortgage rates are affecting our housing market quite a bit. When they spiked last year, we kind of fell off a cliff with buyer demand. And lately rates have been coming down, or at least being more stable. And that's kind of the big news this week. So stability is the key here. This article from Mortgage News Daily is saying we have seen much needed improvement from 3 to 4 months ago. The level of improvement is perhaps not even the most welcome change, rather it's stability. With a range just over 0.5% for more than 3 months, rates haven't seen a narrower, more stable range since late 2021. So not only have they come down over the last 4 months, or in comparison to the last 4 months, but they're staying lower, which is welcomed. We're not seeing a whole bunch of change and volatility in rates. And this continues to talk about how this has coincided with a shift in mortgage applications. This week saw purchase applications tick up to the highest level since August. My sources in the mortgage industry said that they saw a 3% uptick this week in mortgage applications. So that's continuing. The last few weeks we've seen more than that, but it's all been kind of growing since the beginning of the year, since these rates have stayed lower, so to speak, and stable. So that's what's going on in the mortgage industry. We'll see if that continues, but that's certainly fueling the demand that we're starting to see here in Phoenix specifically, I think nationwide as well. But I can definitely speak to Phoenix and seeing a lot more buyer demand coming to the surface out there. So before we jump into the elephant in the room, if any of this is valuable for you, I'd love if you'd hit that like button and hit subscribe so you can be with us every week. I'm here every Monday. Okay, let's talk about it. Goldman Sachs says 4 U.S. cities will suffer a 2008 crash in home values. Phoenix made the list. You can see us right here. Oops. Phoenix, along with San Jose, San Diego, Austin. So we were the lucky ones. Noticeable increases before drastic decreases of more than 25%. So I have a few questions on this. I'm not sure how we're going to see noticeable increases before a drastic decrease based on where we're at today. So there wasn't a whole lot of detail in this article as far as the basis for that. They do talk about interest rates going up. They have a new prediction that fixed mortgage rate to be 6.5% for year end 2023. Well, if we're at 6%-ish right now, and we were up to 7 last year, and we basically went from 3 to 7 in 1 year, I don't know how going to 6.5 is going to really impact us to the point where home prices drop 25%. I wasn't fully following their logic here on how we would go up and then down. But regardless, they do talk about a peak to trough decline of over 25%. So let's just assume we don't go up from here and we only go down from here or from the peak, right? So the peak was in May. We're already down 14% from the peak in May. So that'd be another 11% Phoenix would need to go down in order to hit this 25% number, which wouldn't be catastrophic. In 2008, Phoenix actually saw a 60% decline in home values. So we would still not be as bad as 2008. So, just a few thoughts on this. I don't think it's comparable to 2008. I also don't understand how we would go up and then down, but let's just assume we don't go up, we only go down. I still don't see 11% being totally catastrophic. So those are my thoughts on the Goldman Sachs data. And, they are looking at this from a national scale. And to their point, Phoenix is one of those areas that has heated up the most. And I totally agree that there is some correction to be had here because we probably need to give back a little bit. And we have, like I said, 14%, and that was a pretty quick change. But for right now, the way things have been going in Phoenix, prices are stable. I don't see them growing quickly. I don't see us having any sort of massive demand that's going to grow prices as quickly as we've been seeing. But I do think at this point, it seems like the decline has slowed down. Now, all of this could change as economic factors change, as interest rates change. So there's a lot that could be different as things continue. But for now, I just am having a hard time seeing this and comparing to 2008 when that was a 60% change. 25 is not quite that. So those are my thoughts. Let's talk about Phoenix. Where are we right now? So the Cromford report that I always follow and share, we're at 113.8. And if you're new here, the way to read this is anything between 90 to 110 is a balanced market, and above 110 is a seller's market. So we are technically in a seller's market in Phoenix Metro. Our demand has continued to climb up a little bit, although it's still below normal, about 25% below normal. And our supply has continued to just go down very slightly. So it's below normal by 34%. So the more demand and supply move away from each other, the more our overall index is going to be affected. And in this case, when demand is outpacing supply, it's pushing us higher into a seller's market. Now, every city is different, so keep that in mind. Let's look at our cities here. All of them have been moving closer to a seller's market. Fountain Hills is the only one over the last month that didn't do that, but they've been at the top of this list throughout the last 8 months. So they've finally saw a little bit of softening, although not much. They're reading in at 163 of a CMI, so that's definitely a seller's market according to the Cromford Index. And we still have a number of cities that are in buyers markets. Goodyear, Queen Creek, Maricopa, and Buckeye, all of these are under 90. So those are considered buyers markets. And then we have our balanced markets right here in this middle section, starting with Surprise and then going up through Peoria. I guess there's only two. And then everything else is technically, oh, I'm sorry. No, that's so 90 to 110. So Surprise, Peoria, Gilbert would fall in there as well. But then Tempe and above is all considered a seller's market right now. Now, keep in mind, this is all very weak seller's markets. These arrows are saying that month over month, we've seen an improvement towards a seller's market. We actually saw an improvement of 20% over the last month. Last week, when we looked month over month, we were at 22%. So this month over month reading is just slightly lower, but still showing some pretty big improvements compared to what we had been seeing even like a month or two ago when we looked week over week. So anyhow, this is where we're at. So keep in mind, as I was saying, even though these are technically sellers markets, they are very weak sellers markets. So this isn't a situation where we were last year at this time, where as a seller, you're going to get 10 offers no matter where you're priced and everyone's waiving contingencies. You just might actually get some showings, some interest, and possibly an offer in the first 30 days. So we're getting to a point where things are heating up a bit. There's a little bit more activity. Buyers are actually interested in looking at homes. And so that's really putting us in this very weak seller's market. And so in the buyer's markets, however, these aren't drastic either. So as a buyer out there, if you're trying to target any of these in the buyer's markets, keep in mind there really aren't any fire sales going on right now. There aren't a whole lot of desperate sellers. So although you can definitely come in under list price, maybe ask for concessions, maybe push on a little bit of things, you're not getting success for the most part in like super low ball offers and all of that stuff. So that's where we stand. Every city is a little bit different, but we'll see where this continues. So far, things have been going strong on this this improvement for sellers, this strength in the market, buyer demand coming back as we've gone through January. We're almost out of January. So the first month of the year has been much stronger than expected. And we'll see what comes out with economic data this week and with the Fed's rate decision, which I think we're all pretty sure will be 25 basis points. And if that stays the same, there shouldn't be many surprises or volatility in the market, but we'll see. Anything could happen. So if you want to consider selling your home because we're moving in this stronger direction, check my description. I have a link for an instant home valuation. It'll give you an idea of what your home's value could be. And if you're not sure what to do, set up a discovery call with me. I have a link below where you can do that. I'd be happy to talk with you and see if I can help you make a decision one way or the other, whether it's buying, selling, investing, etc. So thanks for joining me and talking about this elephant in the room this week. I hope it was helpful, and I will see you guys again later this week on Friday with a new video. I hope you have a great one.